Good morning, this is Jason Sen from daytradeideas.com. We're going to have a look at cable again this morning. We've been following this quite closely during the week for two or three reasons. The first reason is the weekly chart that you can see here. We're testing a 2.5 year trend line, the upper end of the channel, the gradually downward sloping channel that we tested earlier on in the month, and we've retested again this week, and we're still failing to close above this trend line, and it does look like we should start to come lower. We are overbought on the weekly stochastic. We'll look at the daily chart now. As you can see, the daily chart's magically appeared, and I'm showing you this just to emphasize the fact that as well as hitting that 2.5 year trend line, we've put in a double top. Yesterday's high was 162.57, which was just 3 pips below the October 1st high of 162.60. So this sort of reinforces the message that we could be seeing a peak here for the pound versus the euro. Just note yesterday's candle, we made a new high for the last 2 weeks at least, up at 162.57, and it beat the previous day's high of the 22nd, made it and closed lower. So basically this is a reversal, what I call a reversal, new high, lower close. So again, that's a bearish candle yesterday, just to add to the negative signals that we're getting from the pound versus the euro. We're going to look at the short-term chart now, the 4-hour chart. There you go, 4-hour chart, and yet another negative pattern we're seeing. I'm just going to open this right up. We've seen a bit of a rally, and this looks to me like we could be forming a head and shoulders pattern on the short-term chart. This is the 4-hour chart. You can see here we've had a good rally up. This looks like what it could be the left shoulder. We've got a head formation here, and assuming we hold below 162.23, which is a bit of a short-term Fibonacci resistance level, and we certainly have done today so far, this could be then forming the right shoulder. The neckline is pretty obvious, but I'll draw it in. We've got it here. So the neckline, if you want to be precise, is sort of 161.20 area. We've got the low here for the last, well, for this week at least, the low is 161.16. So once we get through 161.00, that's pretty much going to confirm the break of the neckline, a head and shoulders pattern, and we should pretty quickly see 160.30 and even 159.70 would not be a huge surprise. So all in all, I'm not seeing any reason to be long cable at the moment. The only way I'm going to change my mind is if we see a close above 162.60 or a significant intra break above 162.60. But as long as we hold below there, there's a good 2 or 3 reasons to be bearish of this market, and we are overbought on the stochastics as well. So all in all, I'm looking for this to be a selling opportunity. In fact, even now, look at this candle here, 4-hour candle, new high. We haven't closed this candle yet, but if we were to close around here, that again would be a negative, a new high closing below the previous candle. So all in all, quite a negative picture for cable. Thanks very much. I'm Jason Sen at daytradeideas.com.